All right. Today we have Tom Hotovec. He's soon stepping into the role of CEO at Meritex after nearly 2 decades in leadership roles at the industrial real estate and investment company. Hey, Tom, thanks for joining.
Hey JD, thanks for having me on.
Yeah, of course. First, can you tell me a little bit about what your work has been so far at Meritex?
So I joined Meritex just about 19 years ago at the turn of the year here. I was a CFO, and at the time, 20 years ago, the ownership had changed or began to change from the second to the third generation of the family, and the family had reassessed and reiterated their goals. So that brought about some refinement of our strategy to be a high performance company, enhance our liquidity, and just make sure that the business has the capability to stay around and stay strong on for multiple generations going forward. We like to talk about having a 100-year history, but we look at the if you flip it forward, right, we're trying to do things to make sure that we can be around for another 100 years.
Yeah, awesome. How did you first get into this industry?
Like all good things, maybe by accident. I
Right.
had gone to college and studied accounting. I graduated and didn't have a job. And so I took a temp assignment. And my first assignment was at a commercial real estate company in Iowa. It was ultimately became General Growth Properties. So through my time there, I, General Growth was a growing company. And I think both General Growth and Meritex and along my career path, I found opportunities where there was a growing business, which created career opportunities for myself to learn and try new challenges. And at General Growth, I kind of quickly moved out of the accounting role into more of a capital markets and investment activity. And it was a small team, so I was able to work with the executives there, and really they became mentors and taught me about commercial real estate. And it's really been a great fit for me. I think I've truly enjoy building businesses, solving problems, building relationships, and here at Meritex, we've been able to do that in a way that's good for everyone, right? Our shareholders, our employees, of course, our customers and capital partners as well, but also trying to be engaged with the community.
Yeah, of course. I hear that often that people get into the industry kind of by accident. Usually, there's some mentor relationship that brings them into it. That's it's just interesting to hear you say that. Why were you chosen to lead Meritex?
Well, I had worked with the family, and Paddy McNeely is our longtime CEO. He had become the CEO in 2001. I joined the company in 2004, and Paddy really led this transformation of the business, both in the real estate and an enhancement of our culture over these last 20 years. So I've been kind of on his team, helping, build the culture, establish our strategy. And as part of that, I've been able to, demonstrate my capabilities, but also be highly aligned with our shareholders and our board.
Yeah. What are some of your goals stepping into this role?
Well, I think it's critical that we are aligned with the family and that the family is engaged in the long-term vision of the company. I think as we look back and think about our success, it's really we ask us we're research oriented, asking questions about what drives really our revenues, which leads to our success, and that's the demand drivers for our tenants. So we're trying to think about, what do our tenants want? How do they make a decision around what space they're in? And then, we build back from there around our strategy. Our goal is to have buildings in locations that meet our customers' needs so that they can be successful and prosperous in our space.
Yeah. Are you finding some locations right now to be especially kind of suited for this?
Yes, back to 20 years ago when as I started, they had done some of this thinking about the strategy. And as a 100-year-old business, we had what we today call our legacy assets, things that they had bought and operated out of prior to the 2000s. And Paddy had been on a trip and learned from a broker that 80% of the leasing transactions are 50,000 square feet or less. And that kind of got him thinking and us thinking about, well, if that's true, how do we make our goal is to make our business stable and resilient. If you think of baseball, right? I want to have more strikes so I have a better chance of hitting the ball than balls if I'm the batter. And so we just tried to position our portfolio in alignment with that tenant demand. And then over time began to think more about how that tenant, why those tenants are choosing our buildings, why are they choosing certain submarkets. And that's really helped us find a lot of success in the last 10 years. If you think about Amazon and e-commerce has been a big trend, that's all about getting close to your customer. And so these smaller buildings that we own are close to more infill locations. And that's really helped us benefit as part of that last mile trend, but also during the COVID pandemic, supply chains are of course viewed differently now by most businesses. It used to be an expense. And I would say over my career, the corporate mantra has been, just in time, right? Let's kind of shrink down and become lean and efficient. And during the pandemic, just in time became a problem because the goods weren't flowing smoothly. And just in case is what became the new moniker that businesses lost opportunities because they didn't have product to sell. So carrying a little bit more inventory has been good for those businesses.
Sure. Are there some efforts or strategies that your company has been involved in lately that might be of interest?
From the tenant demand part, I think that trying to understand the demographic trends is probably the driver there. But from a broader strategy, we've looked at how can we become more knowledgeable, deliver better service to our tenants. So we've focused on trying to build critical mass in a few select markets. Our portfolio is in 9 markets across the country. And in order to do that, we have our own financial resources as an organization. But I would say in the last 10 years, we've done a series of investment relationships with other parties, some large life insurance companies, pension plans, and more recently a fund that we raised that has allowed us to continue to grow our footprint without taking outsized balance sheet risk. And what that allows us to do is have, 1 million or more square feet in each market. And then we put teams in those markets that can, build those relationships with the local brokerage community and the tenant base and really help us understand what trends are taking place in our portfolio.
How would you say, you said you're in 9 markets, right? How would you say the Twin Cities market kind of shapes up compared to other metro areas that you're either involved in or just that you're seeing across the country?
Yes, so right now we own and manage 12 million square feet across those markets, and we're 99% leased across the whole portfolio. So every market is doing terrific today. I would say over the long term, or if I look back over history, we might divide our portfolio into 2 segments, those in the upper Midwest, and we have an exposure to the southern portion of the United States as well. And the United States, Minneapolis is not the most volatile, highest growth market in the US, which is an attractive quality for us, and that we, having some steady Eddie in your portfolio is great. And some of those in the South have been more volatile, those high growth markets. Sometimes that big upside comes with, more downside when there's a recession. So Minneapolis is our company was founded in St. Paul. And so Minneapolis is home for us, and having a nice presence here is important.
Yeah. Is that because of just the diversity of the Twin Cities economy, you would say, or do you think there are other factors with that?
Yeah, as part of the diversity, a few anchors to our economy are, the state capital, a Big Ten university, and there's, I believe, 20 Fortune 500 companies headquartered here in the United States. So a lot of stable employment base that, kind of serves as a foundation for our economic performance.
Definitely. How are you reflecting on kind of the changing dynamics of the industrial market over the last year? It seemed like the first part of the year things were great, and then there were some challenges that came that were still in it. What do you think of just how this last year has been?
You're right. The demand side has been terrific. As I mentioned, our portfolio is essentially full, and that's given us some higher rents. That's been good for our business, and that we want that mutual prosperity for our customers. So we're trying to find those highly functional spaces for our tenants. The other side of our business, the investment side, is where some of this challenge has come up with the high inflation and more recently these higher interest rates. So that raises our borrowing cost. And I think it's really disrupted the investment marketplace. Each year, we're trying to buy roughly $100 million of properties. And the borrowing side of those investments, that debt market is disrupted. Some people aren't playing, and the pricing is moving very fast. And so on the investment side of buying a property, there's a lot of uncertainty as to, or a lot of different opinions anyway, of how people want to price those assets. And maybe rightfully so, many people are choosing not to play in the market while it's so volatile.
Mhm.
And so as we're closing out 22, we kind of look forward to hopefully some normal, more consistent pricing and liquidity on the investment market in the first quarter.
Yeah, I want to talk about that a bit. It's kind of felt like we've been at a fork in the road, a wait and see for a bit now. Do you have any grasp of what the future holds? Do you have any thoughts on what could be to come?
Yeah, unfortunately, I don't have a crystal ball, but
Right.
I think, as I said earlier, we've been around for 106 years, so we've tried to build the business to be steady so that we can, we've got consistent cash flow and we've got balance sheet capacity, so that if there is a bigger recession and let's say the Fed doesn't orchestrate a soft landing, there's a deep recession, we've got the ability to survive that. And if I think back to 2009, we had the relationships and the resources to be on offense and make investment opportunities. So if that scenario plays out, we'll be in good shape. And if hopefully for all of us, it's a soft landing and things kind of stabilize, we'll be able to find opportunities to grow our business and borrow the necessary capital to make investments on favorable terms.
Yeah. Awesome. I mean, your company's been through recessions and depressions, right? And still made it through.
A lot's happened in 100 years.
That's right. Tom, I don't think I have any other questions. Was there anything you want to add that I didn't ask about?
I would just, I think for Meritex, I just can't overstate the importance of the relationships that we build with the family and their engagement with the business. Meritex has done an outstanding job of building its governance and culture. That culture is what allows us to attract and develop the talent that we have at our company, building meaningful and lasting relationships with those tenants, brokers, capital providers. So we're really trying to develop a strategy to achieve the vision, but do it in a way that creates success for all of our stakeholders. And mutual prosperity with our tenants is kind of at the top of the list.
Yeah. Awesome. Well, hey, thank you so much for taking the time. And
My
congrats
pleasure.
on
Thanks.
the new role. Yeah. Take
Thank
care.
you.
Yeah.
See ya.